Okay, hello everyone. Thanks for being with us today. I'm Carolyn Kousky. I'm the Associate Vice President for Economics and Policy at Environmental Defense Fund and a longtime researcher of disaster and risk transfer topics. So I am always happy to be talking about these themes, and even more so with such an amazing group of panelists with me today. And I'll get around to introducing them in just a minute. But first, I want to tell you what we're going to be talking about. So in this session, we're focused on how risk transfer can contribute to creating more resilient households, more resilient communities, and also to improving equity in the outcomes we see from disasters. Everyone listening understands the essential role of insurance is, of course, recovery. And we have a growing body of research that households that have insurance, for example, are more likely to rebuild. They have stronger and faster recoveries than those without insurance. And that's because other sources of funding for recovery we know can be insufficient, inaccessible, or just too delayed. And so as more members of a community are insured, we also see spillover effects and improved economic outcomes for the community as a whole, because economic activity gets reestablished faster as more people have the resources they need to get back on their feet. That all said, we are now seeing disaster insurance markets that are under stress. We're seeing a growing disaster insurance gap and ongoing and serious inequities in recovery, with some groups locked out of access to affordable and appropriate risk transfer products. So we also have a ways to go. On the other hand, insurance can also be used to help promote risk reduction. There's long been hope it could provide financial incentives to insureds to invest in lowering their risk. And there are emerging concepts about things like increasing payouts at the time of rebuilding to fund the incorporation of resilience measures, or new models that could use payouts for preparedness in order to help actually lower total losses. But a lot of these are still theoretical ideas or not in widespread use. So I think it's fair to say that we're not yet fully harnessing the potential of insurance to improve resilience. But this is an exciting time because there's lots of innovation happening in this space. And we're seeing a lot of emerging pilots and concepts that we're going to talk about today that I think really have the potential to move the needle on these issues. So I hope everyone enjoys this panel. I think it's very timely. We're also going to spend some time talking about what's needed to take the kind of emerging ideas and pilots we're seeing and scale them up and replicate them and expand them. And growing innovations around resilience is going to require lots of things like new and strengthened partnerships. We're going to talk about partnerships today, continued creativity in developing new approaches that can really center the needs of people and communities, and a concerted effort to remove barriers and obstacles. So that's me teeing up our conversation and why I'm so excited to be talking with everyone on this panel today. So let me introduce them to you. I'm going to start with Jake Clark. He's the managing director of the North America Public Sector team at Guy Carpenter, the reinsurance arm of Marsh & McLennan. Jake has over 30 years of market experience. He's advised clients on risk and supported their risk management strategies. And Marsh & McLennan is committed to building stronger connections between the public and private sector in order to manage the challenges that businesses and communities are facing from systemic risks like climate. We're going to talk about a lot of those exciting partnerships today. Let me turn on now to Theodora Macris. She's a senior policy and research associate at the Center for New York City Neighborhoods. She convenes the Coalition for Affordable Homes, which is a group of housing counselors and legal service providers throughout New York City that works to strengthen homeownership affordability and preservation statewide. Jackie Higgins at Swiss Re leads a team that designs, originates, and executes innovative risk management and transfer solutions with public entities throughout North America. Prior to that, Jackie was the head of global partnerships at the International Finance Corporation at the World Bank. And Andy Reid leads ISI's efforts to develop actionable natural disaster satellite data to public sector organizations. And before being at ISI, Andy was the vice president of public sector practice at Guy Carpenter. And before that, he was at FEMA, where he was the executive officer for the Federal Insurance and Mitigation Administration and an advisor to the Deputy Associate Administrator for Insurance and Mitigation. FEMA has very long titles, as part of the FEMA Resilience Leadership Team. So I am so thrilled to have these people with us today. We've actually all been working together on a project in New York City that I think is one of these unique partnerships, and we'll discuss some of that and also have this broader conversation. So let's start by each one of you telling us a little bit about how your particular organization is thinking about resilience. Jackie, do you want to kick us off on that?
Sure, happy to, and thanks for having me today. I think we're fortunate that we are an example of the public-private nonprofit partnership because we all are working together. So I'm looking forward to the conversation. So Swiss Re's stated mission is to make the world more resilient. And we do this by focusing on mitigating climate risks and advancing the energy transition, building societal resilience, and driving affordable insurance and digital solutions to advance access to insurance. Providing financial resilience against natural catastrophes is Swiss Re's core business, where the Nat Cat reinsurance makes up more than 20% of our property and casualty reinsurance business. And as as we all know, natural catastrophes are occurring with frequency, intensity, and severity, causing a distressing loss of lives and considerable economic costs around the world. And both industrialized and developing countries are affected. But as you articulated, Carolyn, surprisingly, both are materially uninsured. So, we estimate that about 65% of economic losses are caused by natural catastrophes over the past decade were uninsured, which leaves this financing gap to be borne largely by the public sector, which creates long-term fiscal instability at a time when we all know that government budgets are fully strained. So Swiss Re, about 10 years ago, was one of the first insurance reinsurance companies to create this dedicated team to working with governments at all levels to improve resilience and transfer risk. And as you articulated, I'm here today presenting the global team with a focus on North America. So thank you for having me.
Thanks so much for being here. Theodora, over to you.
Sure, thanks. Thank you for having me. So the center believes in resiliency as making housing and communities more broadly equitable for everyone, both in terms of homeownership attainability and household safety. And our programs and our mission are really rooted in creating pathways to healthy, sustainable, affordable homeownership opportunities for New York's working families. Resiliency to us means that communities of color have access to fair lending, that seniors have the resources they need to age in place, and that young New Yorkers see homeownership as something attainable. And now with the emergence of more severe climate events, it really comes down to making our older housing stock more physically resilient to climate change, both in terms of flooding and extreme heat, and ensuring that all New Yorkers have access to disaster preparedness.
Thanks, Theodora. Jake?
Thanks, Carolyn. And again, I appreciate the opportunity to be here with everyone today. Right, so at Marsh McLennan, right, 60% of our global business, which spans 130 countries, is focused in on risk and insurance. And right, that at its core is all about expanding resilience. When you marry that with the other 40% of our business that focuses in on consulting, we look to link those things up so that we can help provide our clients a roadmap to how do they achieve greater resilience, because I think everyone recognizes there are many issues at play, and sometimes those issues can go beyond just the risk transfer side of the equation. Given the nature of our business, we help clients think through and manage challenges that they're grappling with, issues related to people, health, physical risk, as well as systemic risks. And that features heavily in the services and the value propositions that we build. At our core, we believe it's really important that public and private sector work more closely together to handle some of the challenges that are coming at us today. Climate risk isn't the only area where we think this needs to occur, but it certainly features heavily in the dialogue that's occurring right now across the landscape. So we're looking for new ways to engage so that as a society, we can better manage risk, whether that be associated with weather or climate change or man-made risks, such as cyber and terrorism, just to mention a few. So really looking forward to this conversation today and focusing in on some practical ways in which we can start to achieve some of that.
Great, thanks, Jake. Andy, your turn.
Thanks, Carolyn. And thanks for the opportunity. So ICEYE is a satellite company, and we own and operate the largest constellation of synthetic aperture radar satellites in the world. And we've deployed that constellation of satellites to monitor natural catastrophes. We're now focused on building global monitoring capability and analysis capability to bring solutions from ground, airborne, and spaceborne assets to governments in the insurance market to enable resilience. So this means we're able to deliver a global capability that will be consistent and can help insurers and governments address areas of resilience, including protection gaps and other things of that nature. So we're excited to be working with many governments around the world on this issue to deliver near real-time intelligence so they can better respond and allocate resources, and similarly be working with the insurance market also.
Great. Thanks all of you for providing that helpful introduction to where you are and what your organizations are doing. Let's now get into a little bit more specifics and details. Theodora, let's start with you. As you noted, your organization has seen households respond to disasters. Can you tell us a little bit about what you've learned about what the kind of needs are of different households and communities for improving their resilience in New York City?
Sure. So for those who may not know, the center has been a leader in storm recovery for homeowners since Hurricane Sandy hit New York City in October of 2012. Since then, we launched floodhelpnewyork.org in partnership with several city and state agencies to provide homeowners with resources they need to check their flood risk and flood mitigation options and to learn about flood insurance. And what we've seen since then is that homeowners and small property owners face increased flood risk and rising flood insurance costs. And many, unfortunately, are still recovering from Hurricane Sandy and now, of course, after Hurricane Ida. And they're in need of home repairs and renovation services to prevent future flood damage. It's taught us that housing counseling and wraparound services for homeowners is crucial to ensure that relief efforts are successful. And beyond that, when disaster hits, we've learned that families need emergency, no strings attached funding deployed very quickly so that they could use those funds however they need to support themselves and their families.
Thanks, Theodora. I think it's really exciting to see organizations like yours helping draw the connections from what the kind of real household needs are to what some of the financial solutions might look like. So talking about financial solutions, let's switch over, Jackie. I know Swiss Re supported resilience through many different insurance programs at different scales. So I just want to ask you to pick one or two that you think have been maybe most exciting or impactful that you'd like to share with us.
Sure, absolutely. And I do think it's interesting to have Theodora kind of the juxtaposition of her being kind of close to the end beneficiary. And I think the way that we see us is us supporting our public sector clients, right? And those tend to be governments at all levels. So it's a little bit higher up, but I think that that's what we're trying to do here, which is draw how does the whole supply chain kind of work together to provide support. So I think for us, the most impactful insurance programs are really ones where we're responding to the needs of our public sector clients. And I think that, for us, I just would like to mention, and maybe one where we've actually seen the demonstrated payout of one of these programs, which can demonstrate kind of how we're supporting resilience, because it's one thing for us to be kind of having created these programs, but you really want to see, you're not asking for a natural catastrophe, but you want to see how these programs really work in real time. And I think it's important to pick examples that demonstrate how the products really work and help people on the ground, rather than us talk about all the ones that we have existing out there. But, fortunately, we haven't had a natural catastrophe to test the product itself. So one, I can just speak of one, and for the sake of time, is we designed an earthquake parametric for the state of Utah. And for the state of Utah, they really wanted to use that to support kind of their traditional earthquake insurance, as well as to kind of cover some other expenses that they had in the event of a disaster. And it was tested on March 18th, 2020, when the Salt Lake City area was hit by a 5.7 magnitude earthquake, which was the strongest earthquake that the state had seen in nearly 30 years. And the parametric worked as structured, and there was a partial payout within 30 days, enabling the state to get back on their feet more quickly. And I think that this demonstrates the value of this particular product, which is a parametric insurance product, which is really enabling the public sector clients to recover more quickly and it provides the needed flexibility that they can use those funds as needed once the event occurs.
Thanks, Jackie. That's a great example to actually, like you said, it was tested and kind of learn from. And I think important to highlight how we need all these solutions at all these different scales. So I appreciate those comments as well. Jake, I've always been struck that where you sit, you see both sides of the market, demand and supply. So I wanted to ask if you've seen changes in insurance around improving resilience around climate, or what you see as kind of big trends on either side of that market.
Sure. Well, first, why don't we just reflect a little bit on what happened last week down in Florida, right? And just the incredible devastation that Hurricane Ian caused, which draws attention right to the issue right there. But that's not the only issue our industry has been grappling with. You know, over the past 5 years globally, our industry has been dealing with issues of flood, wildfires, extreme storms, and again, responding well. You know, over the last 3 years, there's been 300 billion losses to the industry, which is also sort of some unprecedented trends. Now, at the same token, we look at the other side of the equation. If our industry isn't picking up the bill, then often, right, the balance of that bill is falling to government, and they're grappling with some of the same challenges. At the same token, historically, they've relied really predominantly on taxpayers and debt to cover some of the bills associated with that. And now you're seeing macroeconomic issues at force with rising interest rates and inflation that's stressing budgets, as I think Jackie mentioned a little bit earlier. So, you know, I pause for a second just to point out to the crowd that, right, these challenges aren't lost on us. Our industries looking at this, they're concerned about issues with profitability. They're concerned with issues about climate change and the trends of losses. Yet at the same token, there are numerous practitioners in our business that are looking to lean in to try to address some of the challenges that are at play. Right, despite some of the challenges we've seen, the capital supporting the insurance and reinsurance business has been resilient. It has been holding up. And at the same time, we are seeing more interest in how our industry can lean in. Right, FEMA and the federal government has entered into reinsurance transactions with our business and our industry because they see the benefit that can bring. So longer term, we are actually optimistic that our industry and public sector can link up more functionally going forward and bring some good solutions to bear. And we're hoping like projects like we're working on with New York City will help provide a roadmap for others to follow. And we believe if we can set that roadmap up, there is plenty of interest in our business to lean in and take part and look to create some of these solutions.
Thanks, Jake. I love that idea of leaning in. And that's kind of the focus, I think, of our whole discussion, right, is to kind of help push that. So I appreciate that framing. I think one way the industry has been leaning in or has been given more opportunities, and maybe you, Andy, you can correct me if you don't think this is right, but is through the kind of advancements we've seen in technology and the like tremendous explosion in data. And that's opened up a whole lot of approaches that maybe we couldn't have thought about years ago, a decade or two ago. So Andy, would you maybe talk to us about how you see data and technology helping here?
Yeah, absolutely. I mean, you're spot on that there's been a tremendous increase in capability, including now commercially private companies that are delivering an incredible amount of spaceborne assets to bring global scale to some of these data solutions. But there's a ton of advances both in ground sensors and airborne monitoring solutions. And all of these culminate to a constant monitoring capability and a lot better data to inform the trends and impacts from natural disasters, and also, of course, other civil security related, defense related things separately. But so the capabilities have advanced rapidly, and what they're providing is an incredible value proposition to go into places where previously data hasn't been available and provide financial resilience tools and provide enhanced response and recovery capability. And so I think we're a good example of a company that frankly started as a satellite design company, launched satellites, started operating them, and realized the potential of this hardware to really change the game. And so it's really important for us to bring this data both to support sophisticated nations and areas in monitoring and responding to events, but also to work with the insurance market to bring that resilient financial mechanisms like parametric insurance, which we've discussed, to these areas of interest. And there's a real potential at this point, not only to leverage the existing capital, the catastrophe capital markets and reinsurance market, but potentially to expand that as well as we look at bringing data to new types of risks and new areas of the world. So there's a real value proposition behind a lot of the innovation that's happening that is very relevant to helping communities and the insurance market work together. And so we sit at the nexus of those two, really to try to deploy capital in to inform resilience and recovery. And inform risk over the long term. So as we're gathering all this data as well, what we're doing is building a library of data over time. And so you can start to analyze risk in a different way that's potentially more accurate than some of the models that have been out there. But taking the observation-driven kind of capabilities that we bring and marrying them with modeling so that folks like Swiss Re and others can price the risk and model the risk and communicate the risk is something that we're very actively working on, and certainly excited for this project to explore that. And we have some other projects in African nations as well that we're working on. So bringing this capability to underserved cities and communities in those regions as well. So it's a really exciting time, I think, for a lot of this innovation.
Great. Thanks, Andy. Let's now try to weave all of these kind of comments together and talk a little bit more deeply about this project we've been working on together that we've all kind of alluded to. So I thought maybe I'd give a couple sentences, high-level overview, and then I know each of you can dig in on kind of different specifics of what's going on and maybe what the implications are. So as noted, we have a project pilot in New York City. This is funded by the National Science Foundation through their Civic Innovations Program, which is a really innovative approach to try to link communities and researchers with actual real-world policy change and impact. So our project is designed to address this clear need that we found through some of our survey research, that lots of sources of post-disaster funding to households to face the huge expenses we know they face after any disaster events like we just saw with Ian, as Jake mentioned. But a lot of the funding to help cover those costs can take a long time to get to people, can take months before it's in people's pockets. And while more affluent households can cover that funding gap with their savings or with access to credit, we saw that low and moderate income households can really struggle with that and turn to coping strategies that can really lead to sort of downward financial spirals. And so we wanted to help get money to people quickly, flexible money to help prevent that sort of negative financial impact on a household. I'll also say we targeted rainfall-related flooding, which is escalating in the Mid-Atlantic region, and New York City saw a year ago with a couple very severe rainfall events that many of the population in the city that's at risk from that type of flooding aren't aware that they're at risk of it, aren't prepared for it, and are uninsured, which is a little bit different than the coastal areas where there's been maybe better and more outreach around some of the flood risk. And I should note, a partner with us on this is the Mayor's Office of Climate and environmental justice. And they've been working with the center on a lot of related and complementary outreach around some of these flood risks. So in this pilot, the Center for New York City Neighborhoods is going to be using the risk transfer markets to help finance an emergency grant program to help meet those immediate needs. So Theodora, let's start with you, and maybe you can talk a little bit about how the center hopes to be using these types of risk transfer tools to improve, recovery for the households that you work with.
Yeah, thank you for the question. I mean, you just summed everything up so perfectly, but I can add a little color. We really want to solve the recovery gap for low-income homeowners who, after a flood, as you mentioned, may not have the resources they need to muck out their basements or supplement their income or keep up with their mortgage payments while they wait for compensation or federal aid. And because flood insurance rates have increased substantially due to changes to the NFIP, it is an unattainable cost for thousands of homeowners. So we want to make it easier for folks to access flood insurance, to understand its benefits. So we're thinking through that by piloting a parametric flood insurance pilot program, as Carolyn mentioned. We're also determining the feasibility of providing vouchers to low-income residents to subsidize their flood insurance premiums and provide one-on-one counseling for homeowners. And I think the piece about counseling is especially important as these costs increase, because now homeowners need to work with somebody to understand how this will financially impact other household finances that they may have. We also think it's important to fund homeowners with, be able to provide homeowners with resiliency audits and elevation certificates, which are not only crucial adaptation interventions, but they can also reduce the cost of flood insurance. So with the pilot specifically, we're really looking to figure out how we can reduce the burden of paperwork, not have homeowners need to demonstrate whether they own their home or what their income is, to be able to at least receive money quickly so that we can demonstrate the need for a tool like this and a product like this in New York City. So it is a pilot. We're thinking small scale for now because we want to really get it right, but we're hoping that this is something that can be taken up more broadly in New York City for future flood events, which we know are just going to be increasing.
Thanks, Theodora. And I really appreciate the point that you stressed there that's kind of underlying the center's work, which is the insurance and the finance piece is just one piece of this bigger resilience puzzle, right? And it's so great that the center is providing all these other important aspects of those services for households to kind of make it all work together, right, for the kind of change that we need to see. So that's great. Andy, maybe we can pivot back to you to talk more about some of the data, because this pilot, I think I'm right in saying, is breaking some new ground with trigger design. I know that rainfall related flooding in a dense urban environment is a tricky nut to crack. So maybe you can talk to us about that.
Yeah, I mean, really just to, talk about current events also, really the capability that we're trying to bring is similar to what we're providing to FEMA related to Hurricane Fiona and Hurricane Ian, which just happened in Florida. And we want to provide the city and the stakeholders at play with real-time information as to depth and extent of flooding. And so, with Hurricane Ian, we were able to provide FEMA with insights literally within a matter of days after the flooding that as much as 300,000 buildings were impacted by flooding at varying degrees. And more than 20,000 of those buildings were affected at 5 to 8 feet of flooding potentially. So those are very material insights that can drive response activity, but also enable better characterization or reduction of basis risk around these parametric triggers. And so in New York City, obviously, there's a very built environment, high density, tall buildings, which is typically challenging for remote sense driven solutions only. And so what we do is we bring in other open source data that we can crawl and gather about the event. We also bring in aerial driven stuff. So if somebody flies a drone or something of that nature, we can make use of that information. And in this case, what's really cool is New York City has a program called FloodNet, where they're deploying sensors throughout the city that will monitor flooding in real time. And so those sensors will be deployed throughout the city, and we'll be able to take that in as a data feed into our multi-source analysis and then provide this same type of insight in to support New York City. And so it will not only enable structuring of a trigger mechanism when flooding reaches a certain point or area of interest or added depth, it will also enable response and recovery activity for the Center for New York City Neighborhoods and others. And so, it's a really important dynamic for us. We want to have these not only be transactional from a financial resilience perspective, but also have data that's really actionable to help go into these underserved areas of the community and help them better respond and recover. Because we realize certainly the inadequacies of the existing kind of relief programs in terms of low-income folks navigating that process. And so this is really about bringing the tools to help with assistance and help with financial resilience.
Thanks, Andy. Yeah, and I like the emphasis that these data and tools can be used in both the pre-disaster and the post-disaster. And that's so important to link those. Jake, let me turn to you now. And while we're all very excited about the actual pilot in New York City, as Theodore said, it's small, we're learning. This is a learning by doing, I think. And Jackie highlighted how you sometimes have to stress test these things with an actual disaster to see how they're working. So could you talk to us a little bit about how you think this might help replicate or expand or push other, similar projects forward elsewhere?
Yeah, I'd love to. And I just start by sort of echoing some of the themes that Theodore arose. When we were building sort of a concept about community-based cat insurance, we recognized finding a few pilots out there that could serve one as a roadmap, but also again, as Theodore, sort of lessons learned as you go through the process. Not just for the community in terms of how they can apply these, but also for our industry and other stakeholders in terms of addressing some of the challenges that are naturally going to come up. What we like about the New York City pilot is it's small, it's focused. We're going after a peril that's one of the most prevalent in flood. And we're focusing it on clearly sort of an at-need component of a community. But even more broadly speaking than that, when you consider flood and story after story about the lack of take-up and how do you bring insurance to bear in some of these areas, because that's going to be the tool that's going to be able to respond the quickest and help the community get back on their feet. There's also an ESG component to this, which is something that resonates with stakeholders in our place in terms of how we can take insurance solutions that are working very well in certain aspects of our societies and bring them to underserved components. So as we've stood up New York City, we've seen, and as we've been around talking with other people, there's been interest expressed in what we're doing and how we're doing it and all of that. It just tells me right there that our ability to engage more broadly with other communities and use what New York City is doing as a very good example of processes that they could follow and bring to bear in their own circumstances. By the way, it was no different than when we were working with FEMA and the NFIP and helping them engage with our industry for the first time. There were all sorts of lessons and issues that needed to be tackled and overcome from just a federal infrastructure standpoint in engaging in financial tools that they hadn't thought to engage it with before. So again, to replicate this going forward, we see fabulous opportunity to take these kinds of solutions, these kinds of approaches, and then link them up with some of the acts that have been approved and put in place by the federal government. If you think about building resilient infrastructure and community program and the mitigation dollars that the federal government is making available to communities to strengthen their infrastructure, linking that with a more robust risk transfer solution around it, whether it be on flood or whatever the peril might be, will help improve that. Just in the last few weeks, the Community Disaster Resilience Zone Act of 2022, again, another act that's been processed that's going to help focus in resilient related issues with communities that need. So there's plenty of interest, and again, a lot of areas to make engagement. The fact that some of these solutions are starting small and then building out over time, I think makes a lot of sense, because we've seen before sometimes people who try to take some of these solutions and make them too big too early, they can sometimes collapse under their own weight. So we like the concept of finding something, start small, make incremental improvements, and then expand and take unbudgeted issues and make them into budgetable issues that communities can manage to.
Yeah, thanks, Jake. That's great. And I think we're all really excited about pulling out those kind of lessons learned from a small pilot that can be expanded elsewhere. Jackie, let me turn to you. Swiss Re's been a leader in this space. So can you talk to us about how you see this as part of your broader efforts? And also maybe, since you've worked with the public sector, how you see these partnerships really helping to drive solutions?
Yeah, absolutely. I mean, I think that, a lot of what has been said is kind of how we see it. So, for example, we do see this as a broader initiative, as part of our broader initiative, right? You have the scalability and replicability, as Jake said, about this particular product, and testing it with other cities and areas that are focusing or dealing with the same issues. And you said, Carolyn, right, part of the reason why we do this is because of the financial challenges that these public entities face, right? So, and things that we really want to try to close that protection gap and help these governments be more financially sustainable after an event. And, Andy, to your point, which is interesting with respect to data and technology and the evolution, the innovation, it's not as much that, I think in general, you wonder how innovative insurance can be. I think our team sees the need for fast innovation, and we're hopeful that, even with a small pilot, that maybe we can start thinking about the questions of, can AI and machine learning help anticipate damage and the need for evacuation and mitigation and advance payments? Can we reshape disaster relief using data to prioritize payments in need, which is part of what we're trying to do here in New York City? And maybe on down the line, we can use kind of payment technologies, right, and claims experience to help get money to where it's needed most. So it has broader applications and things that we talk about a lot within our team. I think, to your point of this public-private nonprofit, right, partnership, it's complicated. You see all the various partners represented here in order to bring this small pilot to bear. I think one particular example where we've seen real success in this area is in the area of where the insurance industry has been able to bring its existing risk knowledges and expertise, which is kind of the protection of our natural environment, right? The protection of natural assets like reefs, mangroves, wetlands, sand dunes, and then also kind of protecting the revenue derived from those natural assets and enabling green-gray construction of those natural assets, something that's being talked about a lot. And I think that these nature-based insurance solutions are similar to what we're trying to do here. Is it takes a variety of different actors to pull together to make these solutions possible, and a variety of different funding, grant assistance, insurance, recovery, et cetera, to make these happen. And one just kind of example that is, was a pilot, and it is slowly being rolled out to other parts of the world, is in 2017, Swiss Re worked with the Nature Conservancy and the government of Mexico to design a reef cover for Quintana Roo, Mexico, to protect the largest Great Barrier, or the second largest Great Barrier Reef in the world against hurricane. And the reason why we needed all these players to come together, and it wasn't just about ensuring or designing the insurance product, but it was also the payouts for that insurance product were used to protect the natural asset, the reef. But it wouldn't work unless you had kind of nonprofits participating in creating a brigade that would be on alert when and if the barrier reef was attacked and needed to go in and restore. So you needed the government involved, you needed nonprofits involved, you needed the insurance industry involved. And we've seen that there actually has been a payout as a result of a hurricane hitting the Quintana Roo Great Barrier Reef. And I think that we all know that this is an example of where kind of protecting our natural assets helps with the restoration and protecting the restoration of the natural asset in and of itself, which is used to protect the viability of the economy for, let's say, the beaches along that area for tourism. So I think that all of these various examples are super important to demonstrate how we can all work together to create these products. And I think we all know it's not easy, but it is difficult, but the challenges are not insurmountable. And I think that we need more of these examples so we can show that it can be done.
Thanks, Jackie. You teed up perfectly where I wanted to take us into the next question, which is that innovation is not easy. And maybe when we're trying to harness risk transfer to solve social and environmental problems like you were talking about, it requires these complicated partnerships that you were explaining. It requires all these different people to be at the table. And that adds layers of complication and difficulty, especially if some of these are groups that aren't used to talking to each other or not already in collaboration and discussion. But hopefully with each new one, that's kind of expanding out. But I wanted to kind of, dig in on that a little bit and now spend some time talking about what some of those barriers and challenges are to building greater resilience or to using insurance to build greater resilience. So if all of you would maybe weigh in on that a little bit, Jackie, I know you started to touch on it, but I'm sure you have more things to say too. But Jake, do you want to start with you? And this is the time to talk about the hard parts.
And we reflect on this a fair amount. Why aren't we seeing more practical answer? And I think you've hit on some of these things. First, right, fundamentally, it is hard to affect change, and I think people get stuck in their own constructs. They don't know where to go. They don't know where to proceed. I also think at times some of those old constructs, right, large government, particularly some of the larger cities that do have the flexibility via debt, via taxpayers, they haven't thought to engage in risk transfer. They haven't seen really the need. We would argue that just some of the trends that we are seeing on some of the challenges that we're trying to get at, I think we all have to start thinking about partnering differently. I think fundamentally there's also a drag even how disaster funding works in this country around the Stafford Act sort of plays into that as well. And I would just encourage government to sort of consider some of the trends that we're seeing there, right? Routinely now, presidential disaster declarations are numbering well over 100 each year. And while we absolutely all concur and see the need when it comes to something like a Hurricane Ian or some massive event, I think we can all agree that we're not seeing, right, over 100 a day. We're not seeing one of those every third day. So the reliance that's being placed on that one avenue, I think needs to be rethought. So, right, you got to start somewhere. And again, we've hit on some of these themes before. What I like about New York City is it starts, and the project there, it's starting small. It's taking one small component and working to a practical solution. Not a study, but they're actually engaging in finding ways to make these partnerships work and in doing it on a small scale so that it doesn't get bogged down with too many stakeholders that can either delay or make something take too much time. I think we all got to find ways to move faster. There are regulatory issues, as we know through this project that we've encountered. How to take some of these new approaches and have it fall into the framework of insurance versus derivative, and how do you unlock not only the capital our industry can bring to bear on it, but then also some of the beneficial tools in proper and more robust risk management. Those anyway are some of my thoughts in terms of some of the things that need to be tackled so that we can move quicker and more robustly down these paths.
Thanks, Jake. Do others want to weigh in on that?
Sure. I would just say, I mean, we echo a lot of what Jake said. And as you can kind of tell, we have these conversations often, right? Because we want to try to figure out how do we get over these hurdles in order to do more projects like this. So we're constantly trying to figure out how we as the insurance industry can do that. And I think, Carolyn, by you pulling this panel together, part of it is education, right? I think that that's what we're trying to do, is educate kind of what is the value, in particular with New York City, the value of parametric vis-a-vis the traditional insurance that they have, and the flexibility that it provides, and the speed of payment that it provides, and how it can be kind of complemented maybe with payment distribution capabilities as well, so that it can get to individuals who need it most. So I think that a lot of it is around getting individuals to think differently about what insurance can provide and risk transfer can provide, and getting them to view it complementary to maybe the traditional ways that they would fund disaster assistance, whether it's through fundraising philanthropically, whether it's through debt issuances on the capital markets, or just traditional disaster assistance coming from the federal government, or at the end of the day, their rainy day fund being swept away, and getting individuals to see education and getting to see that insurance or risk transfer should be part of the overall financial health of what they're looking at and part of their risk management strategy. And so there's aspects that do look at that, the risk managers, but I think you need to get more individuals who are really looking at a total risk management strategy and how we approach these issues. But I think we are all aligned and what the challenges are. The question just is, how do we work together to educate others?
Yeah, absolutely. Thank you. Theodore, I want to give you a chance too to say from your perspective. I think I'm right that this is pretty new for your center to be engaging in these markets. So yeah, go ahead.
Yeah, absolutely. And if I could just speak from the homeowner perspective, and to Jake's point and to Jackie's point, really relying on the expertise of folks in the insurance space to educate homeowners. But I think the benefit of being a nonprofit is that we really have these connections to the community. The center has a network, we call it our network partners. It's an umbrella group of over 30 agencies around the city, from housing counselors and legal service providers, who counsel homeowners on everything from flood insurance to refinancing their mortgage. And so being able to have that connection, I think, is really where that education and base building happens. So I think, back to your original question, the lack of practical engagement, I really think comes around that education and outreach. We really need to provide tailored outreach and education to low and middle income homeowners, Black, Brown, immigrant communities, homeowners in older housing stock. I think after Hurricane Sandy, there was this, emphasis on needing to, educate folks on the coast of what their flood risk was. But inland communities, I think, were really overlooked, and we're constantly learning. But now that we know what the risks are, I think providing that education is going to be incredibly important. And sorry if you just heard that bell. I think that, frankly, there is also a lack of trust in institutions and government agencies to really do right and have people's best interests in mind. Folks on this call may know that the New York City Comptroller's Office denied all 4,700 claims that were filed against the city by New Yorkers after Hurricane Ida, based on the fact that the sewers were not intended or designed to have such an inundation of water. All of the claims were denied. But when you're a low-income homeowner, maybe a senior on a fixed income, or you have a low wage or a low salary, and you have thousands of dollars of home damage, I think it's really, really hard to have faith in that system. So I think, that was not the response that we wanted to see. I think New Yorkers deserve better. And so I think trust needs to be established from the top down in order for any intervention to be effective.
Thank you, Theodora, for providing that perspective. It's really important that we keep centered. Andy, do you want to weigh in on this too?
Yeah, yeah, absolutely. So, I mean, in terms of challenges from a data or solutions provider perspective, we really need to see this community lean in and engage both with risk capacity providers and brokers like Swiss Re and Guy Carpenter, but also really lean in with governments and nonprofits to get them familiar with these solutions, because a lot of these solutions are new. We've built our natural catastrophe monitoring solution for flood over the last year and a half. And so for us, it's critical that we go in and deliver this data to governments so that they can start to get familiar and understand what this data can actually bring to them from a response and in a resourcing perspective. But also, I have to commend Guy Carpenter's public sector team and Swiss Re's public sector team in leaning in to get after how can we model and price this risk so that the market will embrace it. And it's a really important thing. And we don't have the benefit of 20 years loss history or 20 years flood history, rather. And so what we need to do is create that over time. And so for us, consistent capture of flooding and engaging with our government partners on response and recovery is really important so that they get what these solutions bring to them. And while we're there with them helping on response and recovery, we can also blend in the narrative around this could potentially transform how you deliver assistance. And we're seeing that with so many of the agencies that we work with already, where they're looking at the data and saying, man, we could really do a lot with this in terms of delivering faster for underserved areas. Being able to tell that information in real time as to the impact is just really critical. And I think data and solutions providers really need to lean in with these organizations to help go at this from both ends.
Thanks, Andy. That was helpful and started to anticipate my last question as we're nearing the end of time. I wanted all of you to just share maybe one or two things or steps that you think would be most impactful in sort of changing the landscape. What are your priorities or your dream list of what you'd see starting to happen? Just on this bigger topic of building resilience to our escalating climate extremes. I'm not sure who wants to start with that, Andy. I don't know if you started to say, I feel like in that last response, some of those dream items and directions you thought we should go. I don't know if you want to expand on that, and then we can let others go.
Yeah, I mean, and Jake touched on this earlier. When we talk about the U.S. context, what's really important is federal support for these types of programs. And so the Building Resilient Infrastructure and Communities program is a great step. However, I think the aperture needs to be opened even further to look at assistance programs and other engagements that FEMA and other agencies have at the state level with survivors. I think there's a tremendous opportunity for support for these types of programs, not in paying the premium on behalf of states and locals, but rather in helping with the setup, structuring, and cost sharing, all these pieces to make these deals happen. And there's a great convening power as well that FEMA has to bring stakeholders together and talk about these issues. And so it's really important that we do see a top-down approach to some degree, where there is support for these programs. And I think, I'm optimistic by some of the reforms that he mentioned earlier as well. But I think having the public policy framework really start to support this, and a willingness to digitally transform things like individual assistance and, other assistance delivery at the local level is really important. I would also say that I fully support the idea of looking at this as at the regional level. I understand that a federal approach doesn't necessarily fit every environment. Risk changes in its nature as you go up and down the coastline or inland. And so I think creating environments where locals can be engaged, communities can be engaged is just critically important.
Thanks, Andy. Jackie?
Sure. Not surprisingly, coming from Swiss Re, I'll take a very pragmatic approach to what I think is needed. I think more pilots or partnerships like this, right? More entities like Theodora representing the Center for New York City Neighborhoods, kind of stepping up and saying, we want to be part of this innovation. We really want to see how we can work with the public sector, knowing that there is that potentially lack of trust, right? On behalf of you representing those of the citizens that you want to serve, protect, and make sure they're resilient. So I think we all need to we want to see more pilots like this to demonstrate the theoretical that we have, that this is actually going to move the needle. And I think to Andy's point, we always see that sometimes federal change, right, and policy and regulation comes from the state and regional level, and showing how we can really make a difference, and then kind of from the bottom up, maybe shifting the entire apparatus. But yeah, more pilots and cooperation.
That's great. Jake, you want to weigh in, and then Theodora will give you the last word.
Yeah, thanks. So let me just start by everyone just consider, right, FEMA and the NFIP has finally decided that, hey, it's a good idea to partner with the private sector, a large federal U.S. agency, and they're doing so. They're routinely telling everybody that flood insurance policies are the best way for homeowners and businesses to get back off their feet when devastating floods happen. Now, if you just link that up and think, how powerful would it be if more large cities like New York City and others, and it's great what this project right now we're working on, but other large cities and other states started acting the same way. And the powerful message that, our elected officials leading by example, what a long way that would go to dispelling some of the myths out there that the federal government will be there to help me after an event. So yes, more pilots, more engagement, but I believe very strongly that our public sector and our elected officials have to affect change in the kind of policies that's necessary so that we can all move more quickly down these paths.
Thanks, Jake. Theodora, over to you.
Sure. And I just want to echo everything that Jake, Jackie, and Andy have all said. I'm really excited to be part of this collaboration. And so I think we are moving the needle, and it's really, really exciting. I think from if I can just take it down to the very minutia, at least for homeowners, and what we would like to see as a nonprofit counseling people in New York City is, like I mentioned, more outreach and education specifically to inland communities with regards to, severe rainfall, lowering the burden of proof and paperwork when it comes to filing a claim, because that's really a very difficult thing for many people. In order to obtain that financial assistance, I think that would significantly improve recovery, lower flood insurance costs, frankly, or if we can't do that, what are other sort of innovative ways that we can supplement that cost for people so that they are covered? And then finally, emergency, no strings attached funding immediately after an event. Because I think the bottom line is that we need to increase our investment in communities, both in disaster preparedness and recovery. So
great, thank you. Perfect summary. Thank you so much to all of you for being here. I feel a lot of optimism knowing that all of you are on the case helping solve these challenges. So thank you all again.